ministers, excellencies, ladies and gentlemen, friends, colleagues, fellow human beings. I'm Zainab Badawi. I'm the moderator for this discussion at the OECD Forum on Tax and Development. Not a popular subject at the best of times, tax in any country, but we are going to be explaining to you by the end of this particular seminar why it should be right at the center of the development debate and why it is relevant not only in the developing world but also in the developed world. And I don't think any of you need reminding that the former veteran South African Finance Minister Trevor Manuel, outgoing now in these current elections, he's been Minister for Economic National Planning in the Office of the President, said that aid should be spelt T-A-X. So we're going to look at this highly underused tool in the development kit arsenal. We've got a panel who are going to be sharing their insights and experiences and perspectives with you, but we also want you to be involved in this discussion. We have about an hour and a half. And you are able to do this by putting on your phone or your iPad and connect to Ysembly. I think OECD people know about Ysembly, but not all of you have. In fact, you may have already connected after the opening session, but if not, check out the screens to see how you connect or from the information cards on your chairs. So could you all please just take a moment to do that now? And while you're checking your phones, make sure they are also on silent, please. And why we are doing this is because we want you to make your views known throughout this forum. It doesn't preclude you from asking points live in the human form, but it does mean that for those of you who don't wish to do so, you have this chance to make your comment or question. And if you wish to do both, you're also welcome to do that. So all you need to do is use Ysembly or tweet with the session's color-coded hashtag so that your questions and comments will show up on the screen, and also they'll show up on my tablet here, if I know how to use it. But yeah, I usually have people doing the technical side for me, but anyway. Okay, so is everybody ready on that? Good. But before we start our discussions, though, just want you to give us an idea, because you know the late Tony Benn, the British Labour politician, said that the best kind of debates are those where he changed his mind at the end of it. So we're going to see whether any of you have shifted your view on a key question that's pertinent to our discussions, and that is, should tax replace aid in financing development? Should tax replace aid in financing development? So could you take a moment now to vote yes or no or maybe? And we're going to be, if you do that now, please, we're going to be giving you the results on the screen in a couple of minutes or so. And if you're not sure, then I guess you can abstain. But it would be rather good if you could tilt towards either yes or no. And then at the end of our session, we're going to poll you again to see if any opinions have shifted, if our panel here, with their slightly differing perspectives, have managed to sway any minds. Okay, so you're doing that. And of course, Ysembly also gives us a chance to know what people who are not here think about this particular topic. So we'll be able to take questions from people who are viewing this online. All right, so should tax replace aid in financing development? Yes. 1 for yes, 2 for no. All right, so we've got a great panel for you. I will introduce each of them as and when I come to them. But first of all, we're going to have two scene setters from the OECD itself, two people who are going to set the scene. And first of all, on my right, John Lemoy. He's Director of Development Coordination Directorate here at the OECD, a Norwegian national. John brings a great deal of experience, particularly in the diplomatic field, where he served for some time as Norway's ambassador to Zambia. and he's worked in the Norwegian Department for International Development for many, many years. So he's somebody who brings a whole breadth of experience, both at bilateral and multilateral level. And John, if you go to the lectern for us, and I believe you want to kind of set the scene for us, because we're going to be looking at this debate in terms of why should we have a more effective tax system, and then we'll look at the how and what we hope to achieve. So, John, please do set the scene for us in your introductory remarks. Thank you.
Thank you, Zaina. Welcome. Hope you had a nice lunch. In New York, the world is busy debating what the post-2015 development agenda should look like, what objectives we should set ourselves for the next 15 years of development. Then they don't fully agree on what those objectives should be yet. They've down to 16 now. I think all agree that eradicating absolute poverty by 2030 should be our ambition and is possible. We're now moving towards what in the UN language is then called the means of implementation. How are we actually going to do this? If you're going to reach that ambitious target and 10, 15, 20 other ambitious targets, how are we going to do that? And not least, how are we going to finance it? And we need three sorts of money to do that. We need business, commercial investments to get economic growth going. We need taxes, government revenue to fund schools, health, roads, energy, all the other things, security, all the things that we cherish. And we need aid, public or private, concessional financing that can both fill the gaps and help trigger some of the other sources. We do live in exciting times now. When tax used to be a fringe phenomenon, only taxmen like Pascal and people who were extremely offended by having to pay any taxes used to care about it and discuss it. Now everybody discusses it. And also things that only Jan Christiansen and a few others thought was possible a few years ago is now actually becoming the global standard. So things are changing. But considerably more change is needed if we're going to have revenue collection in developing countries that will allow developing countries to finance what they need to do. And perhaps most fundamentally, what we need to do is to make pay taxes the norm. I'm a Norwegian, so of course maybe I'm a bit unusual regarding taxes, but we need to make it the dominating discourse, as we say these days, that in order to have your health, your education, your roads, your energy, your security, you actually need to pay taxes. In developing countries, that means broadening the tax base. That means not least finding ways of taxing the informal part of the economy, which is big and important. And it means doing away with a culture of tax evasion, which is something that international corporations is benefiting from, but also something that the local elite is benefiting from. When I was a young boy, one of our favorite pastimes was to write on walls in the evenings. And we used to write, my friends used to write, John plus Elin is true. And I was supposed to be very ashamed of that the next morning when I saw it. I think we should proudly declare that aid and tax is true. That the marriage of the two is, because my answer to the question that you got would be, it's obviously yes. Tax should replace aid, but only in the long run, not today. And what we need to do now is to repair the ridiculous situation where the most profitable way of using aid, which is to invest it in improving tax system, only attracts a tiny, tiny fraction, less than 1%. Our methods of calculating isn't perfect, of overall aid. So one of the things that we could collectively do in order to move the question to the answer to the question from a no to a yes is for the next decade to double or maybe quadruple the international aid to taxation as the most profitable way of using aid money. Because, and that's my final point, Madam Moderator, because tax is not only a good way of funding, it's the best money, not only because it's local, it's generated, but because it gets accountability right. Because it makes governments responsible to their citizens and gives citizens a point of departure for demanding of the governments that they ought to deliver. Thank you.
Thank you very much. Thank you very much indeed, John. Thank you. Just as Pascal is going, I should have asked you, panel, actually, where you stood on this question of should aid be replaced by tax in financing development? Which of you, do you want to stick your neck out and say what you think? Yes?
I said yes.
You say yes?
In the long run.
Yes, but only in the long run. Paul?
Yeah, I think that's sensible.
Yes? Winnie? Yes or no? Oh, you weren't paying attention, were you, Winnie? The question I polled everybody with. Should tax replace aid in development? Okay, think about it. Absolutely. Okay. Yes. 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 Yes.
Emphatically, yes. But
yes.
About the long run, let's think about the medium term.
Okay. Yes. At the end. They're all yeses. Shall I tell you how you all voted for this? 41% said yes. 59% said no. Panel, you've got a lot of minds to sway, but it's quite close. There's quite a lot to play for. So let's see if we can make any progress and see how we do at the end of this. So, okay, Pascal Saint-Amand is Director of the Centre for Tax Policy and Administration here at the OECD, and a position you've been in since February 2012, and you've held various positions within the French political establishment in the Treasury and so on and so forth. And you're going to be telling us a little bit more about the how we can try to make tax more central to the development agenda. Thank you, Pascal.
Thank you. And indeed, I'm the tax man, and I understand from Jon that it's getting increasingly sexier. So I'm very happy, because usually you say the tax man, you need to apologize. But I tried to bring a majority to the camp of yes, because that's what we strongly believe in here. First, I would like to say that we are at a juncture. The international tax framework and national tax systems are at a juncture for at least a couple of reasons. The first one is that the fact that we are in a global economy, a globalized environment, is a no-brainer. And the problem here from a tax perspective is that the world is made of tax sovereignties, which do not interact that well between themselves. And as a result, you have frictions, double taxation, which is possible and which hampers investments. But on the other hand, you have the risk of double non-taxation. You have the risk of gaps, and tax havens, for instance, have been these jurisdictions where the people who are global thought they could locate their profits or their wealth precisely to hide from these tax sovereignties, which were not that well articulated. The second element to explain that juncture is that all the governments throughout the world need money. They need money for their development, and we'll see probably later on why it's so important to rely on tax rather than aid in terms of democracy, in terms of consent to tax, in terms of developing states. But the developed countries badly need to pay the debt back, and they are increasing taxes on the people who cannot move. VAT has increased in 27 out of the 33 OECD member countries having a VAT system. And at the same time, it's really hard to explain to the people, who, by the way, are voters, that they need to face an increase in their tax bill, but that some players, because they are global, because they live in this globalized environment, actually can reduce significantly their share of tax by using the tax haven, by using international tax, the international tax system. And last, and certainly not least, we are in a changing world. 20 years ago, it was the G7. and which mandated the OECD. Today we are in the G20 environment, and we just need to cope with that change of reality, which probably is good news in terms of bringing the views of other countries to the table. And in tax, these countries, being capital importer, will favor different views than the traditional OECD view, which is more about capital exporter countries. And in that environment, the G20 has clearly said, but we need, I mean, we may represent 85% of the world economy, but that's not enough, especially as the growing part is in the developing world, and therefore we need to involve them, we need to include them, and they have mandated us to do a lot of work with developing countries. So what we are doing, 3 elements, there are many others, but 3 main focus. The first one is about exchange of information. We live in an environment where we need to increase tax cooperation precisely to bridge the gaps between these sovereignties. And that's what we've been doing for the past 5 years, with all the work cracking down bank secrecy for tax purposes. 2009, we came up with a standard on exchange of information on request. Some, probably rightfully, like John Christensen, thought it was not good enough. That's why we're moving to automatic exchange of information, and we're producing a report to the G20 explaining how developing countries should benefit from automatic exchange of information, which is the real end of bank secrecy. This will come real, effective exchange of information in 2017. What you need to understand here is that what we have built to be fully inclusive is that we have created a global forum on transparency and exchange of information for tax purposes. We have currently 122 countries on an equal footing in this global forum to monitor the implementation of the standard. Second big project that you have probably all heard about, which is BEPS, base erosion and profit shifting. How can we address the challenges raised by the poor articulation of tax treaties with transfer pricing rules and these gaps between sovereignties which facilitate hybrid mismatch arrangement and other tax planning techniques, which results in lowering the tax burden for the companies which are exposed to international transactions? The BEPS project is on the top of the agenda of the G20, and here again, we are working at the request of the G20 with developing countries. We have held 4 regional consultations involving more than 100 countries. We have held a number of global forum on tax treaty, transfer pricing, VAT, with more than 100 countries present. We are producing this report to the G20, which will be presented at the end of the week. It will become public after the presentation to the G20 Development Working Group to explain how developing countries suffer from BEPS badly. It's a question of life for them, and how we can help and how we can work together to develop standards which will be truly global so that they are not excluded from the move. Last, and in just one word, to set the scene, capacity building. We need to help developing countries with the IMF, with the World Bank, with the NGOs, with the donor agencies to develop capacities. And in this area, we have a task force on tax and development, which includes the developing countries, by the way. And there, one of the initiatives, we have several initiatives, one transfer pricing with Colombia, which I think is a case study of what can be successful. But an initiative I wanted to mention to you, because I launched it 2 years ago, and this will become real next year beyond the pilot test that we are doing, is Tax Inspectors Without Borders, providing developing countries with good tax experts on transfer pricing so that they go to do an adjustment. And the best way to learn is to do with a team, with a local team. And that's the concept of Tax Inspectors Without Borders. We have around 10 pilot tests for 2014 before the launch in 2015. So I hope that you will take away that we care about developing countries, we take about the global tax agenda, and we do think it's global, and that's why we're involving all these countries.
Pascal, thank you. Did everybody understand BEPS, base erosion and profit sharing? Had you explained what that... Shifting, I meant, sorry. Yeah. Did I say sharing? Yes. Base erosion and profit shifting. So I think most of you are aware of that. Thank you very much indeed, Pascal, for, again, helping us set the scene there. So our panel, first on my right, Winnie Byanyima, who is head of Oxfam International. She's a Ugandan national, served in the Ugandan parliament for 10 years, but also worked on gender and development at the UNDP, the UN's biggest development agency. And your internationally recognized, especially in Africa, as quite somebody who's worked very energetically, particularly in the field of gender and development, and seen as somebody who's an expert very much on championing women's equal participation, particularly when you're at the African Union. So Oxfam have just published this report on tax and development. But if I could just ask you, before you tell us what was in that, and for sure, I'm sure everybody wants to hear what the key messages were. Speaking with your former Ugandan parliament hat, it's very difficult to get voter buy-in, people buy-in, isn't it, to a tax system in a lot of developing countries, because they kind of think, well, who's taking these taxes? What's going to be done with them? There's a lot of corruption, cronyism. It's being used for systems of patronage and so on. You've got to really overcome that before you try to even build an effective tax system, surely. How do you sell it?
Well, thanks, Zainab. And I'm delighted to be on this panel and to give the views of Oxfam. Well, for the developing countries, there are huge needs to address, development needs, health, education, infrastructure, and so on. But for many of these developing countries, ordinary people do not get services that they need for their lives, the education, the health, and so on. And taxation is not seen as the means to deliver to them. So their sense of being stakeholders, this thing that tax brings to you, the sense that you are part of a nation, that you have a right, you've paid your taxes, isn't strong between the people, that social contract between the people and the state.
We know that. Why?
It isn't strong.
Why?
Strong. It's not strong simply because, one, the services that people should get are not there. And secondly, the way the taxes are taken isn't clear in the minds of people. It's mainly indirect taxation, regressive taxation anyway. They are not aware that they are paying taxes through the products that they buy. But coming back to the issue of global tax rules that Pascal was talking about, there is a serious problem. Let me give you some facts. A government like the government of Bangladesh is losing about $310 million a year. $310 million in taxes not collected. This is enough to pay 1/5 of their education budget. A country where there's one teacher for every 75 children. A country like Peru has calculated that it loses $105 million of tax evaded, tax dodging. And this is enough to pay for their maternal health program. So it's clearly a big problem for the developing countries to be able to collect the fair share of taxes from particularly the multinational companies. So we are talking about the importance of poor countries to be on the table negotiating a new set of international tax rules. We are happy, we've commended the OECD for this work they've done on behalf of the G20, but we keep reminding the OECD that 80% of the countries are still locked out. They are being consulted. That's not the same as participation, and that's not the same as participation on an equal footing. We think it's important to have all the countries here because the issue of tax dodging hurts the poorest the most.
So I think that there'll be consensus on saying that you've got to have a fair system whereby big multinational corporations, and we do have somebody from Shell on the panel, but big multinational corporations do pay their tax. But just looking at it from a national's point of view, in a developing nation, this issue of low tax morale, whereby the taxpayer does not trust the authorities, are you not putting the cart before the horse in a developing country by saying we should develop fair, efficient administrative tax systems when perhaps people see that governance is lacking, and that you need to build up the governance, build up trust between the citizen and their government before you can ask for a tax system?
It's really a chicken and egg situation. When the governments don't have the resources to deliver the basics to people, then they are not able to generate the trust. And when there's no trust, then people don't want to pay taxes.
But isn't it the resources are there, but they're going in the wrong pockets?
That's part of the problem. But still, we know that, for example, that you asked about aid. Aid, only 0.1% of total aid is going into helping these developing countries to strengthen their tax administration systems. Aid should be used to help the countries to stand on their own feet, to not need aid. But it isn't going there. So you need to work at it on both ends. It's chicken and egg.
So an organisation like Oxfam is saying that more funds should go into building the tax systems of developing countries as a way of replacing aid, but they've also got to make sure that there is accountability for that extra funding that they give to countries. So is that not going to be, again, international organisations or developed nations calling the shots in these countries?
This is it. You see, aid is not dignifying. Aid is like if you go to the bank, to your bank manager to ask for an overdraft, and they ask you, but were you nice to your wife yesterday? This is not, it's not dignified. You should be good to your wife because you believe in rights and equality, not because your bank manager told you that. So aid is not dignifying. Developing countries want to stand on their feet, be independent, raise their own resources. So aid should go towards strengthening them to build their tax systems to be able to collect their resources.
And it's not just a way of richer countries, in a way, not facing up to their responsibilities by asking these poorer countries to fund their own development.
There's a figure that I found, for example, from Christian Aid, a sister organization to Oxfam. It calculated that sub-Saharan Africa would need to hire 650,000 tax officials to be able to have the same level, the same ratio of tax officials to population as you have in OECD countries. 600, that's how weak the system is in sub-Saharan, before you even take into account corruption. That's how weak the system is. So we need to put more money there, more support there, and of course support to people to claim rights, and that's what we do as Oxfam, helping people to claim their rights, to know their citizenship rights, to ask for services, and to know the importance of paying tax.
All right. Thank you for the moment, Winnie. Let me turn to my left. Mauricio Cardenas, Minister of Finance and Public Credit from Colombia. And I know your country is a big supporter of this initiative at the OECD and G20. And you're a man of many hats, too. You're a journalist, economist by training. You also have worked in big major think tanks like the Brookings Institution. You've held various portfolios in the Colombian government, in the Department of Transport, Energy, and so on. What haven't you done, sir? But anyway, why do you think it is important for emerging countries, developing nations, to have a proper tax system? What's your experience been in Colombia that will throw light on this?
Well, thank you, Zainab. First of all, let me say how delighted I am to be in this panel. This is the first time Colombia joins the ministerial. As you know, Colombia is in the road to accession to the OECD, and we're very excited about this. We give a lot of emphasis to taxation, and taxation as a precondition, as a crucial element in a development strategy. I truly believe that unless you build a strong state capacity, you cannot move forward on the development process. Going back to your question about whether taxes should replace aid, I think to a large extent, yes. Probably not entirely, because as Pascal said very clearly, and John as well, some of the aid should go into building that tax capacity. I think that's where aid gets the highest dividend, because if you develop a strong tax administration, if you're able to collect taxes, then you have the resources to implement development strategies. That's the model we have followed in Colombia. When the government of President Santos began in 2010, our tax collections were about $30 billion. We now collect about $55 billion. That's almost doubling the tax revenues. And we've done that mostly through a better tax administration. We've raised some rates here and there, but it's essentially tax administration that has helped us raise revenues. And that's what has empowered the government of Colombia to increase expenditures in education, health, reducing the poverty rate, building more infrastructure. Without those revenues, we wouldn't have been able to do that. How do we improve the tax administration? First of all, by building a political consensus that the tax administration should be entirely professional, should be technocratic, and should be outside the political debate. Clear and strong public service. In addition to that, Colombia is a natural resource rich country. I'm sure Paul Collier is going to say that countries that have that, John mentioned it in the case of Norway, you have to diversify the tax base. It's the wrong strategy to depend excessively on taxes on natural resources. We're in the top 20 producers of oil in the world, but despite that, we do not rely too much on taxes on oil production or oil exports. We need to diversify the tax base, and that's an essential element that we follow. We, unlike many emerging economies that are oil-rich, we tax, and heavily so, gasoline and fossil fuels. Our neighbors do not do that. They actually subsidize very heavily fossil fuels. That causes us some problems in the borders, but we tax that. And that's part of the recipe for a good tax structure. And let me finish by saying that in a globalized world, and the OECD has very strongly proposing that in a globalized world, tax administration cannot be done entirely at the domestic level. There is a degree of international coordination that is fundamental in order to prevent base erosion and profit shifting. That's a really well put label to a problem that we all face. How have we done that? Well, we have signed a number of conventions, including the OECD's, but also treaties with countries like the United States on automatic exchange of information. That's fundamental. 2, declaring a number of countries as tax havens, and therefore raising withholding tax on transactions with those countries, or tax residents of those tax havens. That's fundamental. 3rd, adopting a number of practices that reduce the erosion of the tax base, like, for example, allowing companies to have very high levels of borrowing that you know it's not real. You know that that's a way of shifting profits elsewhere. That's another form of transfer prices. So adopting strong guidelines on that aspect. And I think the initiative of the OECD on a number of fronts on which we are early adopters, on the tax inspectors without borders, is just a fantastic idea. I really commend you for taking that initiative, because this is very sophisticated. This is, you have to have a really strong training in law, in accounting, to understand a lot of these practices. And unless we get the support from people that are experts on these subjects, we will not be able to do a good job. So the tax inspectors it's a really great initiative, and countries like ours will definitely benefit from it. So in a nutshell, I'm a true believer on the importance of state capacity as a precondition for development. State capacity, to me and to many people, a lot of academics like Tim Besley or Thorsten Persson, means strong tax administrations and the capacity to collect taxes. A lot of the developed world did that during the times of war. And we don't need wars to create state capacity. We should be able to do that in peaceful times through cooperation.
Thank you, Minister. Just looking at some of these questions that we're getting, or points, so you can see them on the screen there as well. Maybe I'll just put one of these to you, Minister, which is how can citizens of developing countries be guaranteed the benefits of a tax increase, for instance? And I know that Colombia last year, you had your tax reforms that you were presiding over. And also, if you look at another South American country, Latin American country, Chile, and what Michelle Bachelet, the new president, is doing there, I wonder if this is linked to the question, because her tax reform there is very, very linked to reforming tax and raising tax, in her case, on sugary drinks and fuel, but saying that this, I think she wants to raise $8 billion a year, doesn't she? Something like 3% of Chile's GDP. Specifically, she says, mostly for education. I want to improve the education system in Chile, she says, and so therefore, I'm going to try and gear these tax reforms towards that. Not quite a hypothecated tax, but do you think it's kind of linked to that question there, that if the citizen is sold a tax increase or a tax reform for a particular objective, that it may help the citizen buy-in, and she also wants to close corporate tax loopholes, doesn't she, in corporate tax as well? That's another key plank of hers. But do you think it does help when you have that kind of debate like the one you're having in Chile?
You're right. We had our own tax reform 2 years ago. I look from the distance at the tax reform that Chile is proposing at this time. I think you need to make it's very hard to do tax reforms. It's very hard in democratic societies. You touch a lot of sensitive issues and areas. So I think it's probably the hardest reform area to go through to Congress, and in our case also through constitutional review. It's a hard topic. You have to have a connection with the goal, the outcome of your reform, and you cannot just say, I'm going to collect more. I'm going to collect $8 billion or 3% of GDP. That's not enough. You have to explain what are you going to do with that. And that type of connection is fundamental. In our case, I won't speak for the Chilean experience. In our case, our connection was we have a very informal economy. The extent of informality is quite significant. It could be about 2/3 of the labor force. So we said this tax reform is aimed at reducing informality. That's our goal. How are we going to do that? We're going to lower payroll taxes. And we're going to raise taxes on profits and personal income taxation as well, especially for high-income individuals. That was the proposition. Very simple. Let's get rid of payroll taxation. Let's shift that so that the reform is revenue neutral. Let's shift that to corporate income and personal income taxes. And people said, well, that's a sensible proposition. That's a sensible proposition. Fortunately, the results are giving us support, and we're having quite significant growth in formal in jobs with all the benefits and a contraction in informal employment. One other element, you need, and I think Winnie made a reference to this, you need to have legitimacy in the tax administration. And tax administrations have problems. They have power, and therefore, power sometimes generates the temptation to corruption. One thing we did was to create a new entity, which is the inspector. What the inspector does is basically supervise, oversee the role of the tax administration and all the employees within the tax administration, and it can impose disciplinary sanctions, and it can initiate criminal charges against the people that work in the tax administration. It's outside the tax administration. It gives more guarantees to people. It makes people feel more confident and safer in the hands of the tax administration. You have to build that legitimacy to really move forward on the tax reform front.
Thank you for the moment, Minister. And just some of the things we're getting there, and it may be something you might want to come back to afterwards, Winnie, which is why report to the G20 on this? That excludes quite a number of countries, it says. I think as far as Africa is concerned, it's only South Africa, isn't it, at the G20 level, for example. But just picking up the point that you made, to put it to you, John Christensen, Director of Tax Justice Network, which is an expert-led network which drives global efforts to tackle tax havens in particular. You've done a great deal of work on this as a forensic investigator and economist. And we've had one point here, picking up on what the Minister said, which is saying before taxing the informal economy in developing countries, make large corporations pay their taxes. Is that something that you have developed at your network? Something you'd agree with?
I think you have to do both. And I think that it's absolutely right that we refocus and rebalance the tax mix because the current tax mix in many countries gives the large corporations, particularly transnational corporations, a huge advantage over smaller, locally based corporations because it's so much easier for a transnational corporation to shift its profits through tax havens into low or very or no tax areas, and this creates a very harmful market distortion. So I think it's crucial that we get the rules for taxing transnational corporations right, which is why the OECD's BEPS program is so important to development. But can I make a broader point about why I think those of you who voted no on the tax aid question should stop worrying and learn to love tax? Because speaking as an economist, I think that tax plays a very crucial role in shaping development at national and international levels. I mean, we talk about the 4 R's. If there's one thing I'd like you to come away from this session, it is make a note of these 4 R's, the 4 R's of taxation. The first, of course, is to raise revenues so that countries, particularly poorer countries, rely less upon debt and aid and more upon their own resources. So revenue raising. The second area where taxes contribute towards shaping development is by repricing. And by repricing, we mean, for example, we know that market economies tend to underprice some items or overprice others. Hydrocarbons are generally underpriced, so we use a variety of different taxes, and ideally a carbon tax as well, to reprice these items to overcome the market failures. The third area is in redistribution. Now, you don't need me to tell you that inequality is becoming a massive issue. Not just poverty, but also inequality, and is causing structural maldevelopment, not only in the South, but also in the North. And we need to address this. And in many respects, tax is the most civilized way of doing this, achieving this redistribution, particularly if we shift the taxes away from taxes on labor, which are overpricing labor, which is what the Minister was just talking about, and towards taxing assets and unearned incomes, because these are, generally speaking, under-taxed in most countries. And the fourth area, and I think this is the one which is least recognized, but is gradually seeping into the development discourse, and the fourth R is the whole idea of representation. Now, the Americans understood this very well when they kicked the Brits out. No taxation without representation. But if you want to build your states effectively, if you want to build that civil relationship between citizen and state, tax is actually one of the best ways of doing this. Because when you start paying money across 2 politicians, you're going to pay a great deal more attention to how that money is being spent, and you're going to demand the governance and the accountability. So I think the 4 R's are a very good way of framing what we need to achieve.
Yeah, picking up one R that you've mentioned, the repricing one, and talking particularly about how maybe a carbon tax is something that you would advocate. So you're stating quite clearly there that the aims of an effective tax system is to bring about inclusive and sustainable development and growth. That must be its goal. So are you saying now when developing nations start drawing up their tax systems, that they have to, in a sense, sort of anchor that a little bit within the green economy and remove subsidies on dirty fuels and lose their addiction to coal and that kind of thing as all part of that picture, and make renewable sources of energy much more attractive within the tax system, both for the user and the private sector?
Well, emphatically, yes, but this is going to be a long-term transition. It's not something that can be achieved immediately. But I mean, let's face it, ecological degradation affects everyone on the planet, whether they're living in the north or in the south, and therefore we all have a shared role to tackle this issue. If you want to kickstart a more sustainable energy program, very often you'll find that some kind of initial subsidy and tax breaks might help to kickstart the development of an industry. But I think that, again, this is taking the issue of a carbon tax. It's quite clear that if we want to introduce a carbon tax, it needs to be a global tax. It needn't necessarily be the same rate, but it needs to be globalized, and there needs to be some kind of cooperative mechanism to achieve a carbon tax. And that's been one of the main stumbling blocks to achieving a carbon tax in the last 20 years.
Okay, and just picking up one question we've had here, because there's been a lot of debate, particularly within Europe, about some kind of tax on international financial transactions. And one question here is, what are the prospects of using international financial transactions tax as a key instrument for resource mobilization to support the post-2015 development agenda?
Well, first of all, let me say I am a supporter of the financial transaction tax. I welcome Europe's move towards achieving this. I think it was, but I see it more as a mechanism. In fact, in some respects, the ideal transaction tax would raise very little revenue, because the idea of a transaction tax is to reduce market turnover, particularly the very high frequency trading, simply by putting in a very small transaction tax set at a very low rate in order to take out the high profits from what's called high volume, thin margin trading. That should be the ideal we're aiming at. I think that if we can devote some of the revenues that come from a financial transaction tax to doing what the minister was saying we need to achieve, when he was saying, which is to build capacity within the tax administrations of developing countries, then we'll be putting that money to very good use.
Thank you very much indeed. Paul Collier, Director at the Centre for the Study of African Economies, Professor of Economics and Public Policy at the Blavatnik School of Government at Oxford University, and somebody who's published very widely on development issues. You're an advisor to the IMF, the World Bank, and Britain's Department for International Development. Congratulations, Paul, because you're now Sir Paul. I think you were knighted this year. So Professor Sir Paul Collier. You think that money spent on tax is money well spent, assistance rather. And there is a question here which perhaps you could address, which is, why is there so little aid focused on supporting the development of tax systems? We know it's very small, as Winnie was saying, but why?
Well, let me answer that first, because I got the answer from a former Norwegian minister who came to see me because he was so worried. Norway's aid budget, they assigned a tiny little bit of their aid to building a tax system in, I think, Zambia. And they worked out that actually this was the most effective aid in the whole of the Norwegian aid budget. But it was the bit that in the Norwegian parliament attracted the most opposition, because the Norwegian MPs were saying, how dare you spend it on bureaucrats in a tax department? You should be spending it on putting children in schools. Now that's the problem, right? It's a failure of the 59%, right? To see the connection between tax and all the things that we care about, right? So I hope when we take a final vote, that 59% will have gone down, right? Can I enlarge?
Of course,
Yeah.
you may.
Every decent, prosperous society on earth has a tax share in national income of 40% or more. Right? And there's very good reasons for that. That 40% tax revenue pays for all the public goods, the healthcare, the education, and so on, and it provides decency, a redistribution system for the poor. That's how much it costs. Right? So when we look at poor societies, I've just been working in Ethiopia. 12% of GDP is tax. So Ethiopia's got a long journey ahead of it part of which is building the tax take up from 12 to over 40. Now, that requires a lot of capacity that at the moment no African tax system has. Because why does tax systems need capacity? Because nobody wants to pay tax, right? Tax systems are always a struggle against tax avoidance. And if you don't have the capacity, you lose that struggle. So I commend the OECD for its efforts in building tax capacity, and I think it's Tax Inspectors Without Borders is exactly the right initiative. Put people into those tax departments, learn by doing, and demonstrate by doing. Right? It's not seminars in Washington we need, it's tax inspectors doing the job in Africa. Right? Why does politically it matter to have these big tax systems? And I was very impressed. The minister from Colombia cited exactly the right modern research. It's Besley and Person. It was fantastically distinguished academics. And what their argument is that the key step, not a useful step, but the key step in economic development is building tax capacity. And there's two key reasons for it. One is that only once people pay taxes, and a lot of it, do they demand accountability. And that's the answer to the question you started with, which is the chicken and which is the egg? Right? The chicken here is actually get the tax paid. Inadvertently, that's what the prosperous world did. It built taxes not because people wanted to pay taxes for healthcare. It built taxes because elites wanted to fight wars. And for wars, they needed tax revenue. And then, in order to get people to pay the taxes, they had to concede accountability. And that was the foundation for our modern welfare states. So that's one reason. And then the other, which in a sense is a bit of a squalid reason, but it's that only once the government is getting a big chunk of national income in tax has it got a strong incentive to grow that income. So we need capacity, but at the moment we don't have it. We don't have it because it's such an unequal struggle, especially, but not exclusively, in the poorest countries. So if we start with Africa, Africa's, the last decade, discovered huge natural resources. The key challenge is to capture the value of those resources for the country. But the resources being taken out of the ground by international companies, and the device for getting value to countries, to governments, is the tax system. And it's such an unequal struggle. You get ethical companies like Shell. I'm sure Shell's been chosen because they're ethical and they're on the panel. You wouldn't put some other companies on this panel, I tell you, right? Because tax for these big companies faced with African tax administrations, tax is largely optional. Yeah? Now, that's not just true in Africa. It's also true in the OECD, which is why, for once, we've got an integrated OECD agenda. Let's build tax capacity, not just in Africa, but across the board. Why is it such an unequal struggle? Well, one reason is simply pay. The pay that tax authorities can offer to people is much lower than the pay that tax avoidance industry can offer. And so the best talent tends to go to the people on the wrong side of the table. So there's an unequal struggle, and what that has turned into, and it's particularly unequal, there's a final reason, which is why the base erosion project is so important, is because tax is still set nationally, whilst companies have internationalized. And that gives companies an extra dimension of wiggle room, which has to be counted. And that requires coordination, and that's what the OECD is trying to do. Now, there is a whole industry of tax avoidance. It's a big industry now. Now, in economic terms, that industry is what's called rent-seeking. Economists developed a whole concept of rent-seeking, initially applied in Africa 30 years ago. And we fought and fought to shrink rent-seeking in Africa, pretty successfully. The challenge now is to shrink rent-seeking in the OECD. It's become a bloated sector over the last 30 years. It's very high paid. It is privately profitable and socially useless. We now need all the strategies for shrinking that rent-seeking sector applied in the OECD that when I was a young man, I was part of the struggle to shrink rent-seeking in Africa. We won there, we've got to win in the OECD. Final point, at the bottom of base erosion, what is driving base erosion? Base erosion is the erosion of the taxable base because companies are avoiding it. Behind base erosion is this rent-seeking tax avoidance sector, and in that sector, the heart of the problem is not base erosion, it's ethics erosion. 30 years ago, tax advisors would not have done what they're now doing, and that we have to push back on. Thanks very much.
Thank you, Paul. Paul, you said working in Ethiopia recently, where 12% of GDP comes from tax. As a question here linked to that, what is an appropriate tax GDP ratio for low-income countries? Would you hazard a guess, or would you know?
I think it has to be driven by building capacity, right? If you don't have capacity, you can put taxes in and nothing happens. Let me end with a ridiculous story, right? DRC, Democratic Republic of the Congo. IMF flies in, did what the IMF always does, says, have a VAT system, build a VAT. So the Ethiopians built a VAT. I'm so sorry, the Congolese built a VAT system. At the moment, that VAT system is actually costing DRC money because the DRC, a VAT system is a complicated tax. You collect money, but to avoid a cascade, you have rebates. Well, in DRC, because there's no decent governance, the rebate system is working brilliantly, but the revenue collection system isn't working at all.
But have you got a ratio in mind?
No, you start from capacity, you build as you build capacity, you put the ratio
No
up.
answer to whoever put that very question. And just very quickly, Paul, you said nobody wants to pay tax, but the point that Winnie was making earlier on was that people would pay tax if they knew they were getting services in return.
And the answer to that is this chicken and egg that in order to get decent services, you've got to have accountability. And you'll only get accountability once people are angry because they're paying taxes. And then they say, what are we getting?
All right. Alan McLean, you're Executive Vice President of the Tax and Corporate Structure at Royal Dutch Shell, but you're also one of the Deputy Chairs of the Business and Industry Advisory Committee, BIAC, here at the OECD. So we've heard about how the corporate world could be doing much more in various ways in this issue of tax avoidance, even evasion sometimes, and we know that the illicit flow of funds, or the flow of funds out of the developing countries is about $1 trillion a year. If you want to give us your perspective, perhaps wearing both your hats.
Yeah, by all means, thank you very much. I think I would start with saying that for the business sector and BIAC in particular, that we have a strong belief that well-functioning tax systems are a central part of the agenda for any developing or indeed developed economy, and that we believe that the business sector has a very important role to play in ensuring that tax systems that are in place are respected and indeed fostered and further developed. So I think that's the first and most important point to make. We have markets, we have employees, we have shareholders and other stakeholders in almost every country in the world. And it's in our interest to ensure that we do everything we possibly can to foster growth and long-term prosperity in all of those markets, even if that may seem to be a particularly selfish thing. So I think that's the first and most important thing, that the business is interested in ensuring that we do have well-functioning tax systems in the developing world. And BIAC in particular thinks that the work that the OECD is doing on tax and development, with its particular focus on the development of capacity and domestic resource mobilization, is particularly important and appropriate given the challenges that we see in those worlds. So BIAC and business is very supportive of the work in particular that that Pascal has kicked off in terms of Tax Inspectors Without Borders. We offer our assistance, technical assistance, in order to ensure that those tax inspectors, either the ones who are traveling in or those who are receiving the benefit of their experience and skills, also have access to a better understanding of the commercial operations, the business operations, the structures, etc., that business puts in place in order to be effective, either domestically, but also more importantly, internationally. So again, a very important role for business in taking this capacity building aspect of the Tax Inspectors Without Borders program forward. So those are some general points I would make. I think there are a few specific points which I think I would like to make that maybe pick up a little bit on what we've heard already. And the first is the importance of having simple systems. It's something which is often forgotten or overlooked. In the developed world, we don't have simple tax systems. We have highly complex tax systems that almost nobody can understand. So we have to, I think, encourage both the developed world, but particularly the developing world, to avoid the temptation to over-complexify. Because with complexity becomes even greater difficulties of administration, even greater difficulties of collecting the right amount of tax at the right time. And I think indeed the minister said that part of the work that had been done in Colombia was to complexify or to simplify the systems. That may seem a little bit unusual, but I think we find that it's easier for tax administrations, but also for taxpayers to comply with their obligations if those are simple and clear and predictable. So that's the first thing I would say. We've heard a lot about the way that transnational businesses have an opportunity to distort or to erode base or to shift profits through transfer pricing. So I think that would be the second point that we would make as business, that having simple but robust transfer pricing systems in place for developing countries as much as developed countries is at the heart of ensuring that that these operations that certain international businesses engage in are resisted. And I think that having those transfer pricing systems in place, backed up with effective exchange of information mechanisms, is the best antidote to base erosion and profit shifting that any country can have. A third point I would make, and something which we haven't heard, which is about the something which we've seen in the work of the Forum on Tax Administrations, which is this concept of cooperative compliance. So we're looking at countries which have very little capacity, and that capacity is spread very thinly. In certain parts of the developed world, we've seen that notions such as cooperative compliance, which has been spearheaded and championed by the Forum on Tax Administrations, is a mechanism by which very scarce resources can be allocated to the places where there's the highest degree of risk. So that, again, is something which BIAC is very supportive of, this idea of all countries, but particularly developing countries, adopting cooperative compliance mechanisms as a means to ensure that the right amount of tax is paid. And then I think I would say, finally, it is axiomatic that the business has a role to play in, first and foremost, making sure that it pays the right amount of tax at the right time on the profits that we earn in the countries in which we do business. Both in terms of ensuring that there is that adequate revenue flow to government coffers, but I think also from the perspective of being seen to be a role model. So I think there is the alternative scenario, which is that when people don't see businesses paying what they regard as their fair share or even paying in accordance with the law, then it creates an even greater disincentive for other citizens to comply with their obligations. So I think that's the final point. Within BIAC, which is the Business and Industry Advisory Committee to the OECD, we have developed a statement of tax principles, which applies generally to all businesses who are members of that organization. But on top of that, we have some best practices for engaging with tax authorities in developing countries. And those set out some clear expectations, best practices, and standards of behavior for business in those countries with respect to, for example, the conduct of investigations, responsiveness to inquiries, but also in particular to the issues such as incentives and exemptions. So I think altogether those kind of 5 points of echoing some of the things which have been said on the panel, but also a particular flavor from business, which I think are important in ensuring that tax is a driver for development rather than the opposite.
Thank you. We'll go to the floor, but just one question specifically that came up for you on Y-Assembly, Mr. McLean, is could business commit 0.7% of their tax expertise to developing country governments to boost their tax take?
I think business is happy to do whatever it takes to ensure that the tax capacity in developing countries is accelerated and grown to the level that's required for those systems to operate effectively, and that's the majority of business. Whether that's 0.7%, I think I will take the same exit as the professor, which is that would be appropriate, what's relevant and appropriate in the circumstances and context of any particular country.
Okay, thank you. Winnie, you wanted to say something?
Directors of companies are hired to maximize benefit for their shareholders. And they will always do that, or they will be fired. So it's really the role of the governments to make sure that companies or rich individuals pay their fair share of taxes. And it's not happening. We know, and it's from OECD data that big multinationals are paying only 5% corporate tax. Smaller companies are paying 30% corporate tax. That's a problem. So it's very important that roles and responsibilities are clear here. And I just wanted to tell you that I was in Congo 3 weeks ago, in Eastern Congo, and we stopped at a roadblock. And I thought it was a security check, only to be told that it was a stop to pay a road tax. We paid for the road tax, but there was no road ahead. There was no road we're paying for.
Fair enough, yeah. You made your point very quickly about a business, but do you also accept the point that Alan McLean made, which is if you look at the role of private investment, FDI, foreign direct investment, very little of it globally goes to Africa. And that is often because they don't have proper, open, transparent tax and regulatory systems, and that you need more FDI, everybody says, into Africa, and that is another reason why you do need proper tax systems. Do you accept that?
Yeah, I accept that developing countries need to build their tax systems in order to raise the revenues, to put in place the infrastructure, to attract FDI. They do need that. But if we go back to why that is not happening, because a lot of them now are actually raising, or rather a lot of revenue is flowing out of those countries, but they don't have that capacity to claim their fair share. This is why this discussion of the international rules is very important, and it's important that they are there to shape those international rules that can help to stop the illicit flow of resources.
Okay. Well, loads of questions on this Y-Assembly. It's a good gadget, isn't it, OECD? But anyway, I have got some human people here. Any hands, voices? Yeah. Are there roving ushers with microphones? Yeah, if you could come forward, ushers with microphones. Can you see the hands raised? And just, the microphones are no use to you unless you want to ask a question. So I would relinquish them. Go ahead, please, sir. Introduce yourself briefly, please. Less than a minute.
Yes, thank you. My name is Petru Roman, and I used to be Prime Minister of my country, Romania, and I'm also a member of the Club de Madrid, who is a global organization of former heads of state and former prime ministers, having a very important project called shared societies. At the crux of the solutions proposed for the shared societies, exactly the tax system. There is a saying in my country, don't beat the cock to make you eggs.
I think we're with you. Yeah.
But what I want to say is that today it's a well-established case about the large companies the income from wealth, the rent should be taxed, which is a very nice philosophy, extremely difficult to make it reality because of the extraordinary power of lobbying. Oscar Wilde said in 1892, cynicism knows the price of all things and the value of none. But once we can imagine that there is a tax system where those companies, the wealth, rent, are more taxed. Please, at least at the national level, do not make the mistake to tax more those who make X.
Okay.
People, talented, ready to take risks, highly qualified, and they are more taxed because they have success. This would be really
Okay, don't kill
a mistake.
entrepreneurship. We've had Oscar Wilde, we'd have cockerels laying eggs. Thank you very much indeed for your intervention, sir. We'll take that as a comment. Yes, please. Briefly, if you would, please. Less than a minute.
Sure.
It's working.
Hi. My name is Marco Fayet. I work in global relations here at the OECD. I had a question for Pascal Saint-Amand regarding the... I was wondering basically what would be the disadvantages, if any, to generalize the system of taxing at the source of the income. I know France doesn't do this, but some other countries, especially Anglophone ones, they take the tax directly from the income, which in my mind would avoid a lot of tax evasion. The second question was for Professor Collier.
Please, one question per
Okay,
person,
sure.
yeah, please. Especially since you're an insider, you can have a bilateral time of your choosing.
problem. Thank
Yes, but Pascal, if you want to just answer that very quickly, if you wish. Who else had a hand up while you're answering that?
Okay, I'll answer quickly a very difficult question. The OECD countries, as a matter of principle, being capital exporter, have had the tradition to tax at residence. It's less and less true because they move towards what we call territorial system. In other words, they tax their companies on the profit they make in the country, but they don't tax the companies on the profit they make outside of the country, which means that these profits may end up taxed nowhere if there is no withholding tax in the countries where they operate. So they are not taxed at residence, they are not taxed at source. And this debate between source and residence, it's one of the key debates in the international tax system. For the time being, there is agreement among all the countries that we need to put an end to stateless income. They are taxed nowhere. So that's the BEPS project, Base Erosion and Profit Shifting project. The next step, and that's a door opener, will be the debate between source and residence between developing countries and developed countries.
Thank you, Pascal. Yes, there's a lady there.
Thank you very much. My name is Kathleen Charles, and I've been working for a number of years in Africa. And my question is pertaining to Hernando de Soto's thesis on the asset of land and how the use of land can be converted into an asset that has been normally very much taxed, so that entrepreneurs are unable to really fully exploit the opportunity to develop the land because it's not considered an asset until it's actually productive. So there is this debate, especially in Africa, about land ownership, propriety, and how the government is regulating this in terms of providing incentives for entrepreneurs. Thanks.
Thank you. We'll take that as a comment. Who else had a hand up? Who's got, the microphone? Yeah, there, and another microphone here. Stand, if you've got it, talk.
David, from the Economics Department of the College of Europe. Just a very basic question on what could be done, especially in key European countries, because we have been saying a lot about fighting tax havens, and many of the problems are coming directly from European countries. In the report from Oxfam, we can read easily that the Netherlands and their tax system is one of the key problems that is drying out resources from African tax resources and tax revenues for African countries. So maybe also to the OECD directors, what is the leverage that we can use when we are talking with the European prime ministers in order to find some harmonizing policies that can deliver a better fiscal system for the entire world. Thanks.
I think Ireland's another country that's often mentioned, isn't it? Yeah. Who had the mic? Yep.
Hello. Hello. Maybe you can hear me.
Yeah.
I used to work within a Big Four firm in Africa, in China. I'm a French national, by the way. But the thing is, when I met tax inspectors in these countries, developing countries, I was struck that they didn't have enough technical skills. And besides corruption, that did not happen that much. I would like to know, can we do something to raise the technical skills of tax inspectors in developing countries?
Okay. We've kind of looked at that a bit, but okay. Yes? Sorry, there's a gentleman there, and then I'll come to you, young lady.
Okay, thank you. My name is Jean Adouloume. I'm the Administrative Director of EDB Summit in Togo, West Africa. I think that we have to share between us, especially in the development countries in Africa, we have to share some experience. They have done an experience in Rwanda, combining all the sources of tax collect. I don't know if you understand. There's custom and the treasure, and then they have a good, good results. And then also in a special initiative in the mining sector called ITIE, Initiative pour la transparence dans les industries extractives. They have to publish what the companies pay and what the state collect. And then they have to analyze the gap between the two sources of taxes, and that is good. Thank you.
Okay, thank you. One example there from Togo, yes? Yes?
Yes. Hello? Hello?
If you put it to your mouth, we'll find out if it's working.
I'm not... Is it working? Ah, there we go. Actually, I have a question in regards to the BEPS initiative and in terms of the participation that was slightly mentioned in terms of the whole process, but in terms of the administrative capacity of developing countries to not only be part of the process of creating the initiative, but then also in their capacity to follow through. So once you have this international taxation sort of regulation of some sort, are they actually capable to benefit from it? And if weaker administrative capacity is being taken into account within that structure?
Okay, thank you. Make a point of that. Pan, I'm going to ask you to make your closing comments incorporating some of those points, that one about the weak administrative structures. Yes? Systems. Yes?
Hi, my name is Eva Schrem. I'm a journalist from the Netherlands. And you've been talking a lot about the need for capacity building. And my question is, does Oxfam do anything in that regard to build capacity, tax capacity?
Okay, thank you. And there was a final question there, then we'll go to the panel. Yeah.
Hi, I'm a Turkish citizen. I would like to ask, how can we design a tax mechanism for the low-income people, outsiders, suburbans, villagers, that function as automatic stabilizer? Thank you.
Okay, so final one, very quickly. Can you give the lady in the spectacles the microphone? Just behind you. Yeah, but very quickly, please. We're short of time.
Bonjour.
Yes, please.
Merci. Bonjour.
Thank you. Good morning. I'm a former Minister of Trade of Central African Republic in the old regime, in the past regime. I have a question. I have understood that there is an organization called Inspectors Without Borders, Tax Inspectors Without Borders, working with BIAC. I hope I've understood this correctly. I think it's an excellent initiative. I think for Africa it is vital that tax systems become simplified with a single one-stop shop. If the inspectors could work on putting in place a tax system with a single one-stop shop, it would be excellent. We've tried to put in place such a system, and we failed because inspectors on site, local inspectors, managed to obstruct the system's functioning through corruption. Perhaps through tax inspectors without borders, this would be one route to the future.
How far should tax replace aid in financing development? Please, if you could do your vote now so we can see what the result is. And while they are doing that, 30 seconds for each of the panel members to incorporate any of those points from the floor in their closing statement to try to sway the audience as they vote now. Starting with you, Pascal, and perhaps you take up that last question about tax inspectors without borders. Quickly, if you would, all of you.
Quickly, two elements. What can European countries do? Well, what we are developing in the BEPS action with 15 actions is neutralize the schemes which involve all the countries, OECD or non-OECD, and there are 15 actions there. And the key issue is about the implementation for developing countries. There are major issues of capacities, and that's why we're working hand in hand with them. En ce qui concerne inspecteurs des impôts sans frontières.
As far as the inspectors, tax inspectors without borders are concerned, this is an initiative which has reached a stage we're currently running tests, a pilot stage, be fully operational by the next year. The aim is to be able to provide tax inspectors for developing countries to help them, in particular, develop a capacity to audit big companies so they can learn while doing. Thank you.
Thank you. So yes, I would just finish by saying that there've been a lot of suggestions that the multinationals are part of the problem. If that is the case, and I'm open-minded about that, then we also have to be part of the solution. And I think the need for government, citizens, and business to work together to ensure that there is the right capacity, that the right tax rules are put in place, and that they're administrable is, I think, at the heart of the solution.
John? Are you all voting, by the way? 1 for yes, 2 for no. Mm-hmm.
What can Europe do? Well, first of all, Europe needs to recognise it is part of the problem and therefore needs to be part of the solution. Europe should move forward with its own multilateral automatic information exchange programme and ensure that that exchange programme is extended to cover all of Europe's tax havens and that it is extended to cover all of the legal devices that are used by people from around the world to hide their assets, including trusts and foundations. Yeah. Europe needs to recognise also that it has a lead part to play in rolling back the whole issue of tax wars, that is tax competition, which undermines the revenue streams by giving extraordinary tax expenditures, huge subsidies to not only business but to other areas. So I think it's time that Europe took a role in these two key areas.
Thank you. Minister, yeah, sorry, we're out of time. Minister, very quickly, if you would.
Well, thank you. 2 ideas. One is that there has to be some form of restraint. It's not just about us controlling more. There is also codes on the part of countries where some of these corporations are headquartered that have to enforce more restraining practices on what they do abroad. That's idea number 1. Idea number 2, it's long been said that inequality should be tackled with government expenditures that should be redistributive in nature. I think that we cannot disregard entirely the issue of inequality when it comes to taxation. Taxes have to be progressive as well, especially in societies that are very unequal. Now it's being debated in the world, the issue about taxes on wealth. I think that's a good idea. It's a good idea.
Thank you very much indeed. Thank you. Winnie, very briefly, 30 seconds, please, because we're out of time.
Okay, progressive taxation, yes, that's very important. Secondly, tax rules, global tax rules that can plug those loopholes that rich companies, rich individuals have been using to not pay their taxes. We need a world tax authority. I think we should look at that. That will help us to get there. Thirdly, we should accelerate the pace towards achieving country-by-country reporting and automatic sharing of information. That should be accelerated. But above all, unlock this whole capture of political power and wealth. Restore democratic power.
Thank you. Restore democratic power. Paul Collier, very quickly.
Thanks. Yeah, I want to take up, will high taxes kill the goose? Right? What kills the goose of entrepreneurship is very high tax rates. The tax avoidance industry is not the solution to that. The tax avoidance industry is not pro-business, it's actually parasitic on business because it's socially useless. Prime Minister Cameron put this very well. The only way Britain can have low tax rates is if everybody pays them. And the tax avoidance industry is designed to help some companies spend a lot of money to avoid paying and so shifting the burden to others. That's why this parasitic rent-seeking sector has to be squeezed out.
All right, thank you. And last word, very quickly, John Lemoy, OECD.
The OECD countries can do two things on this. One is very simple, both are very simple. One is invest substantively more aid money in tax. The other one is implement what, through the FATF, we have agreed need to be done in order to curb illicit flows out of developing countries.
Thank you very much indeed. Well, thank you, panel. And this is how you all voted at the beginning of this session. Should tax replace aid in financing development? 41% of you said yes, and 59% of you said no. And after our discussion, this is how you voted on should tax replace aid in financing development? Yes, 43%, no, 57%. So panel, you have shifted opinions very, very slightly towards you by about 2%, not enough to win the motion, but enough at least to say that you have exerted a little bit of influence. Perhaps we will know that you have won when tax inspectors without borders are as popular as doctors without borders. Panel, thank you very much indeed. Audience, thank you to you.